Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel, as always. Guys, hi. Good morning.
Morning.
It's color coordinated today, right?
In the pink of health.
Pink of health, yeah, I wanted to go for that.
And as you were saying, if I got a pink tie, I think it'll be...
But I guess, that's the only way to look cheerful, right? On a Monday morning when you have so much news flow hitting you, there's so many events coming through this week and you have your work cut out.
Yeah.
You just got to cheer yourself up with a little bit of color.
Absolutely. And I think, I'll tell you guys, I don't think we've had a market opening which is so keenly awaited in the last... it's not happened since maybe the last 2 years or something of that sort, right? Everybody is eyeing 9:15 in terms of what's going to happen.
And I think no one on the street knows which way it's going to go, right?
Yeah, no, that's the other thing, right? I mean, views are so sharply divided in terms of where this should go. And, what we'll do is over the next 60 minutes or so into the run-up, we'll try and kind of get you lots of views, opinion in terms of how things are set up. The fall over the last 2 days, especially Thursday and Friday, has been brutal. I think the SGX Nifty is okay, 35 points, but I don't think that'll matter much because we'll only know at 9:15 which way the wind is blowing today at least. So the last 3 days, and the change should come up on your screen. The fall happened on Thursday and Friday, but what I've done is I've taken the highs on Tuesday morning. Wednesday, I think, was a market holiday, and taken the drop from there. The Nifty is down 3%. Banks have taken a complete sort of knock on the chin, 6.5%, and the mid and the small cap part of the market is also down about 3.5%. Friday seemed like almost capitulation. There was fear, there was panic, and of course, it all kind of started with the big drops that we saw across the board in the Adani Group stocks, and then that fear spread through the rest of the market in a pretty significant way, I would say. So I think there is so much going on. We can do a 1-hour program basically trying to describe all that is happening on this particular issue. The Hindenburg report, the response. Yesterday evening, the Adani Group came out with a sort of 400+ page report in reply to the Hindenburg report. 55 pages of clarification, and of course a lot of annexures, documents, etc. So we can do all of that, but I think what matters for the market straight up over the next 2 days is basically the progress on the Adani Enterprises FPO. I'm talking about the very near term. What matters is will the FPO get done, right? And I think we'll get you updates on this as well as we go along. The Adani Group is very confident that the FPO will indeed go through. The mechanics of it, how it will go through, because there is a significant difference between the price in the market and of course the FPO price. That is something we need to wait and watch. I think there are enough out there who are still skeptical in terms of that confidence which has been expressed by the Adani Group in terms of how will this get done. So this is something which I think in the very near term is absolutely important. It will show confidence in the group, the ability to get this done. And of course, I think it is important for stock prices as well. Stability in the group stocks, potential stability in the group stocks should also potentially bring some stability in the broader market. And I think that is, in a way, the single most important dominating driver as we start a new week, start a new trading session as well. So that's the Adani sort of impact one way or the other. What this has done is it's also basically brought Nifty to very, very crucial levels. The fall that we saw on Friday. There is a cluster of supports around the 17,500 mark on the Nifty. And why am I saying that? What is that cluster? The 200 weekly moving average is at 17,550. There is also the 61.8% retracement of the rise from the October 22 lows to the all-time highs, which stands around the 17,550 mark. So 17,500, 17,550, I think, is the critical kind of a level to watch out for. We breached that intraday and then closed above it. So that's point number one. The low on Friday is 17,493, roundabout, 17,500 broadly. If you break that, then you have supports coming in only around 17,200 or so. That is the 78.6% retracement of the full rise that we saw from September-October lows to the all-time highs of 18,887. On the upside, if the market starts to bounce up a little bit, 17,761, which is acted as a support which got broken on Thursday, I think that becomes a resistance as we move forward. On the banks, I mean, the bank Nifty, it closed below the lows of 41,569, and the next support comes in at the 61.8% retracement, which stands at 39,970 levels. So these are some levels, near-term levels to watch out for as we start another fresh day of trade. But I just want to make a quick mention of the global markets, right? I'm just kind of, I started with India because I think what's happening here is very much India focused, but global markets are trading like it is 2020. I mean, US markets, for example, they've scored their 4th straight strong Friday, the Friday session. And why am I saying they're trading like it's 2020? Bitcoin is rallying. A lot of the weaker spaces in the NASDAQ, tech stocks are rallying 30-40%. Tesla, which tumbled in 2022, that is up 65% in the last 3 weeks or so. So the global sentiment is pretty buoyant, and it is based on the bet that maybe inflation is starting to come under control in a big way. And to that end, we did get inflation numbers. The core PCE index in the US was released on Friday. On an annualized basis, the 12-month annualized inflation rate in the US, according to this, is now 4.4% in December. This number was 4.7 in November and 5.1 in October. So inflation is coming off in the US. And if that was the big macro problem of 22, I mean, the markets are betting that, you know, it's going to be in the rearview mirror and not in front of us. So global sentiment is buoyant. It's a big week. There is this local issue which we need to deal with. And of course, later as we go ahead, there is the big event of the union budget as well. So promises to be an exciting and of course, a much awaited one. Guys, hi.
I love how you ended it with the union budget, right? I mean, generally, historically, you start by saying that this is the union budget week, and that definitely is the biggest cue. But I take your point. I mean, there's so much happening around this whole Adani issue and the rebuttal that has come through. Let's see what happens. At least the SGX Nifty is indicating that the start will be flattish. There is some caution going into really big events that we have this week. Not just the union budget, which is on Wednesday. You have the 2-day FOMC meeting that begins, that starts on the 31st of Jan. That's tomorrow. You'll get the outcome as well. And there is a 25 basis points rate hike expected. So there's caution ahead of that. There are a lot of large cap earnings. There, Nifty earnings coming through this week. Starting today, where you have L&T, there's BPCL, there's Bajaj Finserv, there's Tech Mahindra. Then on the 1st of Feb, there's Britannia, HDFC, Titan, ITC. The list is pretty long. So you have a lot of local cues to reckon with as well. Now, in the numbers that have already come through, there's Bajaj Finance, which look pretty decent actually. The AUM growth came in at 27%. The asset quality has improved, and that perhaps is something that the street will negotiate on the upside as well. Now, for the market, we are at a 3-month low, so let's not forget that. And there was large selling by FIs on Friday. FIs sold almost 6,000 crores, and put together, it's almost 30,000 crores that's sold by the FIs in January. So the bulls are definitely on the back foot as we head into trade. And the clarification that has come in from the Adani Group, and we'll of course talk more about that. There's not only a clarification from the Adani Group, but from large banks as well. So post-market hours on Friday, SBI as well issued a statement where they said that the exposure to the Adani Group is well below the large exposure framework, and the Adani Group's debt to EBITDA has improved and helped the group service its obligations comfortably. So all these clarifications could perhaps lead to some recovery in the stocks and aid the market. So the big question is, of course, Prashant did speak about a lot of levels, but the 17,300 mark thereabouts is the 200-day moving average on the index. Will the Nifty find support at those levels? Perhaps it could, given the clarifications that have come through and some positive data as well. But then again, there are big events lined up, so perhaps there could be some caution as we head into trade this week.
Well, that's right. Sonia, the markets would be looking at the two events, the Fed and Union Bank budget, and suddenly, this Adani issue comes out of syllabus, right? And the hope is that all three of them go according to plan. Now, in Friday's trading session, I was feeling, in cricketing parlance, a little like Rahul Dravid. You need to stay in there, toil it out. It's going to be a difficult trading session. Today, however, I think a glimpse of Virendra Sehwag needs to come in, particularly if the market moves lower. And I say that because the last couple of sessions have been very, very rough. The Nifty Bank losing 5.5% on. And the reason I say that maybe we'll see a bit of a relief rally, how fierce can it be and how much higher can we go? Well, that's a question mark. But when the PCR comes down to around 0.7 and when you have the short positioning coming down, the FI short positions move all the way to around 75%, that normally, sparks a bit of a short covering bounce. Let's see whether it happens this time around as well. And just take a look at it. On Friday's trading session, the FI has added 27,000 short contracts. They unwound some longs, which takes the short positioning up to around 75%. The problem is at higher levels, you'll see some bit of resistance because the way they were writing calls, close to 2 lakh calls were written, way more calls written than puts. And the options data, there were two trends that were clear. One was the call writing, 18,000, 17,800 call, very, very aggressive. And if things go wrong, suddenly these lower puts were open up because, there is some kind of cushion that the market experts were building. In case things go wrong, after a while, we saw quite a bit of put buying as well. What are the levels to track then? The Friday's low is very, very crucial, both on the Nifty and the Nifty Bank. So if you want to, try a bit of a punt, then closer to around Friday's low is going to be rather important. If we break that, then we slide to around the 200 DMA. And keep in mind, the recent support becomes a bit of a resistance. So we can brace for a bit of a bounce. However, at higher levels, those are the crucial levels, 17,750, 17,760 odd mark. I think maybe, in fact, the PCR moving to around 0.7 odd and the FI short positionings, maybe a bit of a relief is on the cards.
Okay, since you mentioned cricketing parlance, we must take a moment to congratulate the women, right? In the Under-19 T20 World Cup. They're winners, so congratulations there. And it's also the first time the women's cricket team has won any World Cup.
Yes.
So I'm so glad they're getting this kind of limelight and this kind of footage, because I guess women's cricket hasn't received the kind of mileage that perhaps men's cricket has. But now things are picking up.
Oh, absolutely. Things are picking up, and wishing the team many more successes going forward as well. So those are jubilant pictures which deserve to be celebrated as we will through the course of the day. Well, let's move on and let's get this going in terms of telling you what's lined up here in the first half hour of the show. We will get you updates from markets across the globe. Abhilash Narayan of Standard Chartered Bank will join us to discuss the global trade setup. Later, our research team will bring you the CNBC-TV18's list of top 10 stocks for the day. At 8:30, we get you the big and highly anticipated interview with the Adani Group Chief Financial Officer. And that is the lineup that we will begin the day with. As I said, it's power-packed and keenly awaited.
Okay, you'd want to wait and watch for that interview that happens at 8:30 a.m. Lots of clarifications coming through and perhaps could be market moving as well. So do stay tuned in for that. On the equities front though, first up we have a comment coming in from Chetan Seth of Nomura, who says that unless there is a hawkish surprise from the Fed and or the labor data surprises on the downside, the market sentiment will likely remain buoyant for now. Nonetheless, he says if the US jobs data does eventually weaken in the months ahead, as their US team expects, he thinks this could be a source of volatility for stocks. However, he maintains his view that such volatility induced by weakening US economy and stocks is an opportunity to raise exposure to Asian stocks.
Well, let's get you some money market views as well. Kunal Sodani of Shirin Bank says that the US core PCE, the Fed's preferred gauge of inflation, is edged down, strengthening expectations of a smaller rate hike by the Fed. He says the ECB continues to remain firm on aggressive rate hikes, says the dollar index has an important support at 101.3. For the dollar INR pair, he says 81.4 to a dollar acts as a support, while 81.9 to a dollar is a resistance.
All right, and on the bonds, Ajay Magnolia of JM Financial says the fear of higher than expected borrowing number in the budget is keeping traders cautious. He says there is no fresh trigger as such besides lower inflation and direction for further hikes or pause in policy rates. He says global markets and crude also await further direction and expects the 10-year benchmark bond yield to trade in a range of 7.37 to 7.43% for the day.
Well, we have plenty of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll look at Bajaj Finance, Vedanta, NTPC, Data Patterns, Vedant Fashions, NMDC, as well as Godfrey Phillips. They are stocks on the back of positive news flow. On the flip side, you have BEL, Kajara Sedmix, and Aarti Drugs. They are stocks that could react to negative news flow.
Okay, well, Abhilash Narayan is joining our Senior Investment Strategist, Group Wealth Management at Standard